Let's start with the banks just real quick, because for anyone worried about Goldman Sachs and Morgan Stanley, I'm here to say, relax. They're doing fine.
They're going to make it.
We were worried that given last week's drop in the market that, gosh, maybe Goldman Sachs and Morgan Stanley and the people running those two large financial institutions have forgotten how to make money. And I'm here to say, based on their latest quarterly results, they haven't.
No, they have not forgotten how to make money. People have kind of forgotten that these places do make a lot of money. The stocks are all down quite a bit this year, down around 20% for the group reporting between BlackRock and Goldman Sachs and Morgan Stanley, 15 to 20%. And the rest of the market up 5-8%, depending on exactly where we are the moment you're listening to this, because it's moving around again today. So it's kind of a time of at least perceived or expected transition for the heavyweight Wall Street banks. There's fee compression, and that's a big part of why there is not that high level of enthusiasm for the stocks right now. They're, at least in the case of BlackRock and Morgan Stanley, more profitable than ever. Goldman Sachs has been bouncing around a little bit further behind in adopting the more passive management approaches and a little bit more, I think, skepticism about their business model at the moment.
Is that what it is with BlackRock in particular? Because, I mean, if you say they're more profitable than ever, the stock's down, I don't know, 3-4% this morning. It's not, and to your point about the year that this group has had, it's not like we've seen over the past month, we've seen stocks pull back from all-time highs. That's not the case, certainly with BlackRock.
No, they're making about $35 a share over the last 12 months, and that's up from $30 a share for the 12 months ending last December. So decent improvement. That's, about 11-12% improvement. And the thing that appears to be worrying the market today regarding BlackRock is that their institutional funds were down over the quarter, and they are very good at attracting very, very low cost funds that is invested in their low cost ETFs, and they're the market leader by far in that, and that's a good place to be, but not a wildly profitable place to be. And there's some concern, I suppose, that the institutional money may be looking elsewhere.